Hello and welcome to Startup Street. I'm Shruti Mishra and with me is Arundhati Ramanan, and these are the top headlines from the startup space. SoftBank-backed B2B platform OfBusiness is planning to list on Indian stock exchanges in the next 12 to 15 months, aiming to raise $750 million to $1 billion via public offer. OfBusiness told CNBC-TV18 that it is in the process of merging its subsidiaries into a holding company and will go for an IPO after the merger is completed.
Automobile materials manufacturer Hindustan Composites invests 5.17 crore rupees in public markets bound Swiggy. Hindustan Composites purchased 1.5 lakh shares of Swiggy in the transaction.
Crypto social network platform Oxapol raises an undisclosed amount of equity funding from Alliance DAO, Anagram and Peak 15 partners. The funds will be used to enhance the firm's product offerings and expand its team.
AI-based EPC and manufacturing marketplace MyTech Innovation secures 6 crore rupees in a debt funding round for expansion. The firm claims to have clocked a 251 crore rupee order book at the end of FY24 and aims to have an order book of 729 crore rupees by FY25.
Cardeco Group makes a strategic investment into Caram, a fleet management services company. In less than 3 months of the operations, the company said it has scaled to over 500 vehicles across Bangalore and Hyderabad and is already profitable and cash flow positive.
Those were the headlines that we've been tracking for you from the startup space. But let's get to the top story this evening. OfBusiness is planning a Dalal Street debut. Shruti, you're tracking this story. You have all of that information for us. So take us through the details.
Absolutely, Arundhati. SoftBank-backed B2B platform for raw material and credit platform OfBusiness is set to head to Dalal Street. The company plans to raise between $750 million and $1 billion through a public offering in the next 12 to 15 months. OfBusiness told CNBC-TV18, and I quote, "We are in the process of merging our subsidiaries into a holding company. We will proceed with an IPO after the merger is completed. The subsidiaries to be merged operate in the processing, value addition and manufacturing segments," end of quote. The company also said that the offering will include $150 to $200 million in new shares, with the remainder being offloaded by existing shareholders. OfBusiness also added that it is in active discussions with Bank of America, Citi, JP Morgan and Morgan Stanley to manage the offering. Founded in 2015 by the husband-wife duo Ashish Mohapatra and Ruchi Kalra, OfBusiness has raised over $800 million from investors till date. Its last funding round in 2021 valued the company at approximately $5 billion. Now, moving on and also on what's brewing, artificial intelligence-powered conversation intelligence platform Convin has raised $6.5 million in Series A funding. The round was led by India Quotient, with participation from new investor JSW Ventures and existing investors Kalari Capital, Titan Capital Winners Fund, Sparrow Capital and 9 Unicorns. To talk to us about the road ahead, joining me now is its co-founder and COO, Bharat Patidar. Bharat, welcome to Startup Street. Now, Convin empowers customer-facing teams like sales, support and collections with artificial intelligence-based tools to track and analyze agent customer interactions. Talk to us about your core product suites and the kind of efficiency and effectiveness they bring to your clients. If you could explain a use case.
Sure. Thank you, Shruti and Arundhati, for having me.
Bharat, you're on mute.
Yeah, can you hear me?
Yes, go ahead. Yes.
Okay. Thank you for having me, Shruti and Arundhati. Let me give you a quick overview on what Convin does. So Convin is a conversation intelligence software platform. We help customer-facing teams to improve their customer conversations by analyzing their conversations automatically with our AI tool. For example, if you give a very quick use case, let's say you're getting a call to have a, let's say, holiday package, right? We help the company to analyze where exactly their agents are not doing well, what value proposition they would have highlighted, or what problem they could have understood better from your side, right? So that's what we do. And we help sales, customer support, and collection teams to improve their business outcome with the AI tool built.
Okay. Bharat, Convin LLM is custom built for Indian contact centers, offers support for over 35 languages, and I believe it is trained on over 200 billion tokens. You claim the model outperforms leading alternatives. Can you tell us by how much?
Sure. So we have built this large language model in-house, and that too very specific for our contact center industry. We have built a 7 billion parameter model with 200 billion token. This outperforms GPT by 20%. And this is not only LLM, but even from the day one when we started building this company, the entire tech we own, right, from speech to text to all the NLP model, we have built this in-house from the day one. And that is the philosophy that we want to build the tech for India and solve the real business problems which are there for contact center industry.
All right, Bharat, let's get to the Series A fundraise now. I believe the new capital will be used to expand the core team and distribution channels. So elaborate on these expansion plans. What markets are you looking at and where are you looking to hire teams?
Sure. So we raised this fund and now we are looking to build our leadership team here in India. The primary focus is definitely to capture the Indian market and expand here. The second is we are also looking to bring more product lines. And in terms of geography, we are looking to expand our footprints to South Asian market, Southeast Asia. And that's where we see a great fitment. And we do have the right people, right process, and the right technology, which we have built and we have experimented. And that is what we have, which we are looking to expand.
Okay, so give us a sense of the current business growth numbers, what kind of revenues you're making, what is the road to profitability looking at, and also share some future growth targets that you have set for yourself.
Sure, 100%. So in the last 1 year, we have really grown well. We have grown 3x in terms of revenue. And sorry, I could not share the exact revenue number, but in terms of profitability, we are very close to break even. And this is what we have observed in the market. The overall mindset and the entire dynamics for market has changed. So we also want to keep that in mind and grow very sustainably from here so that our growth does not impact the cash flow and the overall finances we have.
Okay. Convin has, like you said, grown 3x over the past 1 year. You now serve, I believe, over 80 clients, including major brands like Reliance, Nippon, Titan, and Thyrocare. You're now aiming for a 200% increase in new customers and a 3x revenue growth by next year. What makes you bullish and how do you plan to achieve these targets?
So there are multiple reasons for that, Shruti. In the last couple of years, what we have observed is that the acceptance to AI, machine learning, and all the innovation which is happening in the market, right, it has increased a lot. You can say either because of ChatGPT or other AI innovations. The acceptance of our platform and our market has also changed a lot. And the timing also plays a very crucial role here. We are in this industry and market from last 3.5 years. We have that understanding and that experience, which makes us a great fit right now. So the overall sentiment where even traditional companies are looking to migrate to AI and improve their productivity and efficiency, right? That is where we see we have great timing with great toolkit right now. And we have seen really great growth in the last 1 year. And we have great pipeline. We are right now working with some of the top players in bank and even in other industries. So that helped us get great confidence. And that's why we are looking to grow our revenue.
Speaking of growth, final question to you, and if you could quickly answer that, how do you plan to further enhance your AI capabilities to redefine customer interactions? Any new offerings that you could tell us which are in the pipeline?
Sure. So we are working on multiple product lines right now. And when it comes to AI, it's not only related to agent performance and quality analysis we can do, right? There are a lot of other things we can work on. And we are working with a lot of our clients to understand where exactly the latest AI innovation can help them in their customer journey. So there are multiple products which are in pipeline where we are looking to empower our Indian clients and other geographies so that the latest tech for contact center industry can be adopted in the best possible way.
All right, Bharat. With that, I'll have to wrap up our conversation. But many thanks for joining us on Startup Street today and wish you the very best for all your growth plans.
Thanks for having me.
The Indian fintech ecosystem is the third largest globally and continues to grow rapidly with tripling of unicorns, soonicorns and quadrupling of minicons over the last 4 years. Now, the ecosystem has also matured significantly with 35 plus fintechs at $500 million valuations compared to only 13 in 2020. A report by BCG and Z47, formerly Matrix Partners India, finds that the ecosystem is poised for exponential growth. Ritu Singh caught up with the authors of the report for more. Take a look.
What are the key tailwinds for the industry?
Yeah, I think when we look at the fintech industry, we say very, often that it's somewhat in the middle journey right now, which is to say while there's been a lot of growth, we see a lot of further growth going to come from driving penetration, and this is true across all segments. Whether you look at mutual funds, we are only 20% of our AUM is 20% of the GDP, whereas it's the order of 70-80% plus in the global economies. If you look at lending, if you look at insurance, in all of these we see quite a large gap when it comes to penetration. So I think from a market and demand perspective, that's where we see a lot of growth coming from. In addition, there's also a lot of positive sentiment with all the progressive moves that the regulator has been taking on.
But is it a bulk of the investor focus, the fintech innovation focus, being on the payment side, much lesser on some of the other aspects that you mentioned?
Actually, I would say that, payments was something that, there was a decade of payments with the UPI movement happening. And a lot of, I think, now we see a lot many other segments like lending, like mutual funds also take, ride on some of the technology that's getting built. And we do see that the community in general is quite interested now to take it to the next paradigm of innovation, which goes beyond just, in the payment sector, beyond just payments, to also talk about compliant payments, security.
Is regulatory overhang, is that emerging as the biggest risk for the sector?
See, listen, we are actually all here in this fintech ecosystem because we have a pretty progressive, constructive regulator. And I will say overall, regulation is a feature, not a bug. And I would encourage every...
No one's calling it a bug.
So every startup, and for PhonePe is a humongous company and, actually very regulatory compliant. I think you should, as a startup founder, you need to say that if I need to become large and I'm actually handling, retail money and it's essentially the common man's money, and I want to be systemically important, there is no other way for me to become large
without being compliant.
Without being regulatory compliant and having that regulatory cover. There will be a curveball every 6 to 9 months. I think most of the time the regulator is doing their job because sometimes growth gets ahead of where risk and asset quality are, and so they're doing their job. But at that time, as a founder, you just need to say, okay, how do I use this as an opportunity to get ahead of my competition?
Not innovate, on the guidelines. And we understand, of course, the regulator wants to put guardrails around this innovation so the customers protected. I think that is the end goal. But Nisha, what sort of IPO pipeline should we expect in the coming year or so? How many more could we see listed on the bourses?
Yeah, as we've looked at the data around this, we've seen that between 4 years ago, 5 years ago, and now there has been actually a 2x jump in the kind of regulatory filings that has happened. So there has been fillip in India as well. And when we look at the scan of the global markets, we see that roughly once a company turns a unicorn, between 3 to 5 years is the ideal period for them to actually start going public. And in India, we're seeing now that a lot of fintech unicorns are actually crossing that 2.5-3 year mark. So we do expect a lot of fintechs, going that route. And, the survey shows that a lot of founders are actually very positively contemplating and building the capabilities in these fronts.
Well, that is, just to continue on that, actually, governance is one aspect of it. The other big one is profitability, because in the private markets, you perhaps may get away with losses, may not have been the #1 priority a few years back, but now increasingly the lens is on, what your unit economics are, isn't it?
Yeah. So, and our survey actually shows that compared to last time, 60% of founders are actually confident of hitting that profitability or are actually profitable right now. I think the lack of the IPOs so far is a symptom of the problem, not the problem. The problem is essentially we haven't had companies of that scale and that profitability. Now, I would say across the ecosystem, there's probably like 20 odd companies which are at that scale and are looking to prep to go public. Now, from the time that you start to say we are going public, it probably takes about a year. So I would say very bullish in the 12 to 24 month period.
In terms of some of the defining trends or technologies that are going to shape the future of the growth of this industry, what would you pin it down to, the 2-3 trends?
There's a lot of demand on a founder to produce something that's not only viable and interesting for the customer, but also very compliant, and you can't think of compliance as an afterthought. And I think that's where...
Is that an opportunity for RegTech?
Yes, absolutely. We see a lot of SaaS infratech players actually building that thought as a part of the design, and everybody now says that compliance has to be embedded in the design of what you take forward. It cannot be an afterthought.
A lot of the technology innovation that you're going to see in the next 2 to 3 years is going to be invisible innovation, which is that it is in the back. So if you look at it, this entire ecosystem, it's built on the DPI, which is the digital public infrastructure. It's invisible, but you experience it every day. And that's the next leap that is going to happen.
To another story from the startup world, Apeksha Jain, the founder of the startup Gourmet Jar, says Bajaj Finserv refused to provide an overdraft limit due to the lack of any male directors in the company. In a social media post, Jain asked if women are not capable of running their companies and repaying debt. Her post has sparked an uproar online. Listen into Apeksha Jain's experience.
Got a call for verification, and they were supposed to come over to my office to sign some papers the day after. And on the verification call, they asked me, who the other director was. And when I told them that it's a female director, they specifically asked me for a male co-applicant and asked me if I could have my husband or my brother or my father as a co-applicant. And when I told them that it's not possible, then they informed me that, they cannot proceed with the file because of not having a male co-applicant. It's not just Bajaj. I think it's an industry problem because similar incidents have been reported by other women with ICICI, HDFC, and other banking institutions as well.
On that note, it is time for us to head into a short commercial break. But coming up on the other side, deep tech startup DeepMatrix has raised $1.6 million. We speak to the founder on the other side to understand their growth story and their fund utilization plans. Stay tuned. Welcome back. It's Silvada's on Startup Street. Deep tech startup DeepMatrix has raised $1.6 million in a pre-Series A funding round co-led by Your Nest and Arali Ventures. The round also saw participation from lead angels. The Bengaluru-based company had raised over $600,000 in its last round back in March of 2022. The proceeds will be allocated towards accelerating its growth, enhancing product offerings and mining and asset management, and expanding its presence in key markets, including the US and Australia. Joining me now to discuss this further is Naresh Soni, the CEO of DeepMatrix. Naresh, thank you so much for taking time out and being here with us on Startup Street. You know, just to start with, you help businesses manage all of their geospatial data, which in turn helps your customer cut costs and enhance safety, right? So how is it that you're doing this, and how big is the opportunity here?
Yeah, well, the opportunity is obviously very big. So if you know what geospatial data is, so geospatial data is basically data that comes from drones, satellites, laser scanners. And in last few years, you know that drones are practically a commodity. So many people are flying drones. They are using drones in mining industry, transmission line inspection. They are using in urban land management. There's not an industry which is not using drones and this geospatial data. The data size has grown so big. So what DeepMatrix is building is a solution where all this data can come at one place. We build a solution where you can compute huge amounts of data in realistic amounts of time. So we reduce the time from data to information, and that impacts industries across the vertical. To give you an example, for transmission lines, if an hour of downtime is there, the losses could be anywhere between $1 million to like sometimes $50 million even. Our tech enables transmission line companies to manage that loss. We make sure that there is no downtime in the transmission lines, and that's how we impact these industries.
Right, so creating some efficiencies there. Now, you hope to use the funds that you raised to expand both your presence and your products, right? We'll come to the expansion part in just a bit, but what's new in the pipeline? What new products do you have, and where else will the funds go?
Well, a lot of funds will go into developing the tech. The tech is pretty complicated, actually, and it takes a lot of time, energy, effort, really smart people to build that tech. So a lot of effort is going into that right now. We are talking to a lot of industry partners, design partners. So we have a very standard philosophy at DeepMatrix. We always build with the client. We don't want to build randomly. It's not a scenario that we want to be in, that we build something and ultimately nobody's using it. So we are talking to a lot of potential clients, a lot of design partners. Some of the largest transmission line companies in India are already using our product. We are doing a lot of work with public sector companies also. We recently signed an agreement with MPPTCL also. PGCIL is also working on our product. So right now the goal is that get the right traction, right people along with us. Let's understand the problem in detail and then solve the problem. So that's what we're working on. Yeah.
So building for your clients at this point is what you're doing. But you know, your key markets include the US and Australia, right? Are you looking to expand into newer geographies or deepen your presence there? And what kind of a role does India play? How big is the India playbook for you at this point?
Well, India is a huge market. India is the biggest consumer of our technology. The best thing is that whatever India has, it has scale. If we talk about transmission line networks, India has the biggest transmission line networks. Now, India does not consume tech efficiently. That's fine. But we build a solution here with the Indian clients, and then we go outside India. So it's very standard philosophy, again, that build in India and then sell outside India. So we build all the solution in India. Then at the same time, we have to talk to some potential clients in the international markets also, in US, Australia, in Europe also, because we can't assume that a solution that is fit for the Indian market is fit for the international market also. So we are doing both of these things simultaneously. A lot of discussions that are going on, but of course we are looking outside India. We are talking to potential clients already in US and in Australia.
Right, so building in India for the world, and you're talking to potential clients. So give us a sense of the clients you work with, and which sectors are you working across?
So right now, the focus remains on mining industry and transmission line industry. These two verticals, that's where the product has most matured. Down the line, in next few years, we will have a lot of solutions for urban land management, urban infrastructure management, water management even. So, but those are down the line. Building tech is easy. Building business is a little bit more difficult than building tech. So right now, we stay focused on mining and transmission line. Over a period of time, diversifications will happen.
So diversification down the road is what the plan is for you. But in 30 seconds, if you could tell us what are your revenues at this point in time, and where do you hope to end this year? And what about profitability?
Yeah, so we are always profitable in the unit economics. We never burn money. That's the first thing. Last year was the first time we were selling. We did about $250,000 last year. This year, the order book is already $500,000. We will close probably at $1 million. The goal is to have at least a couple of $1 million in order book this year. In next 2 to 3 years, the target is 15 to 20 million ARR. In our industry, that's a big number, actually. We have very high margins. I can't give you the exact numbers.
All right, so very big plans there, big numbers and targets for you. But Naresh, thank you so much for joining us on the show, and we wish you all the best on this journey going forward.
Thanks a lot for having me. Thanks a lot. Take care.
All right, moving on. Ikea isn't limiting its plans for India to just furniture. The Swedish retail giant is expanding into sleep solutions, artificial intelligence, and pet products to offer Indians a more holistic experience for life at home. By integrating AI into their processes, Ikea aims to make their products more personalized and consumer-friendly. Xenia Baria speaks with the CEO and CSO of Ikea India, Suzanne Palvara, about these new ventures and their further expansion plans in the country. Take a look.
How has Ikea for India and India for Ikea strategy fueled in enhancing the growth and expansion in the country?
It's a very important part when we continue to develop for India that we have a deep understanding for the needs of the Indians and how they live their lives at home, all the rituals they have. We do home visits every year, many times, to learn more. And then we develop in line with that, and we show solutions that are relevant and even also bring products that are more relevant for Indians. So that's a very essential part of further growing Ikea in India.
That's great. And how do you plan on staying ahead of the curve in terms of competition? How does Ikea plan on being right on top?
Yeah, no, I think it starts with home furnishing and the awareness of the importance, what it does to your life. And I think we are on an early stage in India. So we need to work on showing what we do here today, that a better home creates a better life, actually. And I think many players should be part of this journey. There is space for many to create more awareness about the home and how it can improve. So we normally don't fight competition. We think everyone will drive more interest for the home, and that's good.
AI and sustainability are the two buzzwords. How does Ikea plan on incorporating it into its latest collections?
So sustainability is for Ikea not a buzzword because we have been working with it for decades. So we work with integrating sustainability in everything we do. In every product we take the sustainability dimension. How can we improve the sustainability aspect? So you can rest assured as a consumer, the products you buy, we have looked at the impact on the planet. And then on our own operations, we also work with sustainability integrated, how we use energy, how we deliver our goods home with electrical vehicles, etc. So that's really not a buzzword, it's really a part of how we do business. AI is a newer phenomenon, and here we learn how we can use it to create better tools for the coworkers and for our customers to plan their homes. So there is a new tool now called Creative, and that will help you to plan your home, what it will look like you can see in a digital way before you actually do the changes. And that's a big benefit for the shopping experience.
That's amazing. You know, Ikea, as we know, Ikea has now moved into a pet collection. Can you tell us more on that?
Yeah. So for many years we were saying, yes, we are all for everything in your home and the family. And then are pets part of the family?
Yeah.
And we took stands that yes, they are, and we are very happy to bring that collection to India now because a dog or a cat is also a family member and plays a vital role for the home and the life at home. So happy to launch it here now.
With that, it is a wrap on this edition of Startup Street. From Shruti and me, goodbye and many thanks for watching. More news and updates coming up on the other side. Stay tuned.